Hello.
Good morning, sir.
Yes, here it's afternoon. Good morning, that side.
Hello?
I'm saying here it's afternoon already.
Oh, okay. Yes.
Yeah, here,
Monday.
yeah, good morning and happy Independence Day.
Yeah. And how was your weekend?
My weekend was good, just as
Okay, good, good.
yeah, was good. When is your Independence Day? Tomorrow?
Here?
Ah,
No, tomorrow is a working
oh,
day. Today
oh,
is
so
off.
today it's a holiday for you.
Today is holiday for me.
Okay, yeah, I can see holiday Canada Day. Oh, tomorrow it's the United States Independence Day. All right. Okay, let's get started. We're going to look at supply and demand because I believe we finished looking at the market structure. So and how to apply it. We also looked at the application side of the market structure, how you can apply the market structure on the real chart. Now, what we're going to look at now is the supply and demand and see how we can work with it, right? Okay, let me do something like this. Okay, now, when we talk about supply and demand, what are we talking about? Supply and demand. So what are we really talking about? So just a basic concept of supply and demand, just basic idea, you know, layman's knowledge. It's supply. This is where sellers are more than buyers. And we know that sellers in the market are buyers and their role and goal is to bid for lower prices. That's the purpose of sellers. So sellers exist in the market to do what? To take prices lower. And what is demand? Demand exists when we have more buyers than sellers. So the moment we have more buyers than sellers in the market, then we're going to say that demand is definitely more than supply, or demand is in control. Now, when we look at the concept of the market structure or the market in general, which is the financial market, whether it's a Forex market, the stock market, whatever market that you may be looking at, you are going to realize and understand one thing, that the market is a battle of supply and demand. So the market is a battle of supply and demand, and everything that we see from the market structure, and we look at the market structure and how the market, when the market is in an uptrend, which is a bullish market, we always see price creating higher highs and higher lows, where we see the market breaks this high to create a new higher high. All right. So now, once what causes that to happen in the market is what we call supply and demand imbalance. So once we get into a confirmed trend, and we said that a confirmed trend is where we are looking for a low, right? One low, one high, then we have a second low, then we have a second high. So once we have one low, two lows and two highs, then the market is in a confirmed trend. And the next thing that we want to start seeing the market do is the market now should start doing what? Breaking structure. All right, so the market should now start breaking structure. So once price breaks above this high right here, then what we are saying is that demand is in control and supply has failed. So in an uptrend, let me put some notes right here. So I'm going to say that in an uptrend, demand is strong while supply is weak. Okay, and in a downtrend, supply is strong while demand is weak. Okay, so these are some important statements that I've just highlighted, that I've just put up right here. All right, important statements that I put up right here. So what I'm saying is that in an uptrend, demand is strong while supply is weak. And where do we find demand and supply? So before we can look at maybe other types of supply and demand, the first thing that we need to look at is, where do supply and where do demand exist in the market? But okay, in general, demand and supply exist everywhere in the market. All right, but for the sake of understanding exactly areas or points of interest where we would look for some buying opportunities or selling opportunities, then we'll be looking for the turning points of the market. All right, so the turning points of the market. So for demand, we expect to see demand at the higher low, all right, in an uptrend. So once the market creates a higher low, all right, we expect to see what? Demand right there. And this is exactly where the market should come back to. So here we're going to say this is where demand is. And the moment we see the market creates a higher high in this situation, like this high right here, and price begins to pull back, all right, we would say that this is where supply exists, or this is where supply lies. So in the market, in an uptrend, when the market creates a new high, all right, a new high, and then it begins to pull back from that high. What is causing that pullback from the high is the fact that now supply is in control. So supply is taking over the market. Let's say on the lower time frame, the market was creating higher highs and higher lows. So we had a higher high right there, higher low, higher high, higher low, higher high, and higher low. Then we had a lower low. Now, the moment we take out the higher low, which was here, and price begins now to create lower high and lower low, then we know that supply now is beginning to do what? Is beginning to take over the market. So now supply is in control. So at the higher high of an uptrend market, supply comes in the moment price begins to pull back from the high. So once the market creates a high, it begins then to pull back from that high. That high is where supply comes in. So supply is injected right here to push the market in order to facilitate a pullback. All right. Now, the purpose of supply is to make sure that demand fails. That's the purpose of supply. So supply exists in the market for one reason, and the reason is to make demand fail. That's why supply is into the market. However, once supply fails to make demand fail, or once supply fails to break demand or take out demand, then that supply is going to be considered as a weak supply. Why? Because it has failed its objective. So the objective of supply, whenever supply comes into the market, the supply is to overpower demand. That's the objective, that's the goal, that's the role of supply. However, if supply fails to overpower demand, that means then that demand was strong and supply was weak. So here, the objective of this supply is to make sure that this previous demand down here should fail. That's the objective of that supply. It should make sure that the demand should fail. However, if that fails to happen, then this supply is going to be a weak supply, and therefore it's going to be targeted. So we see that then the market comes right here and creates a higher low. And once it creates a higher low, we begin now to see that the lower time frame, maybe supply chain is broken, where now price begins to create what? Demand. So every supply that was pushing the market to the downside, creating lower lows and lower highs, begin to fail as demand now begins to do what? Begins to take over. All right. So as demand now begins to take over. Okay, let me just do this. Okay, so as demand then begins to take over. Now, the purpose of demand is to go and take out supply. So once price manages to do that right here, let's say demand then from here manages to take out that supply, then this demand is going to be considered as what? As strong. So where is demand injected? Demand injected on the higher low, all right? Demand is injected on the higher low. So that higher low, okay, that's where buyers come into the market. That's where buyers come into the market, all right? And the objective of that demand is to make sure that supply fails. So if the demand manages to take out supply or to invalidate weak supply, which failed to achieve its objective, then we're going to say that demand is strong, and therefore that demand should hold the next time price pulls back to it. Why? Because that's an area where a lot of buyers came in and started bidding for higher prices to a point that they were able to overpower supply that was trying to take the prices lower. All right, so that is going to be our strong demand. So again, once the market creates a new high right here, the moment price begins to pull back, or we begin to see on the lower time frame structure shifting from being an uptrend to being a downtrend, like we looked at on the multiple time frame market structure, it shows that supply now is coming into the market. So supply comes into the market. However, like I said, supply, the role and the purpose of supply, of that supply, is to make sure that it invalidates demand. It's to make sure that it invalidates demand, or that it should make demand fail. Okay, but if it fails to achieve its objective, it becomes weak supply. And therefore, what we'll be looking at is that supply shouldn't hold the next time price comes to this demand. Why is this demand important? Number one, we are in an uptrend. Number two, it is a strong demand. And number three, it has managed to make supply fail. It has managed to make supply fail. So that's what makes it to be a very powerful zone that we should be looking to looking forward to taking some buying opportunities from. And also for the fact that the market is in an uptrend, meaning that buyers or bulls are in control of the market and they'll be bidding for higher prices. Okay, so that's what that means. So the proof that this demand is strong and it will hold should be in the invalidation of what? Supply. However, if the demand fails to invalidate supply, or if the demand fails to overpower supply, then that demand is not going to be a strong demand. It's going to be a weak demand. Why? Because it failed to achieve its objective, that is to take out the supply. So again, we have the supply right here, which is created because the market begins to do what? To tend to the downside. Again, at the bottom here, we have demand which came in, and that demand was a strong demand because why? It has managed to do what? It has managed to take out the supply, which is this supply right here. This supply was a weak supply because it failed to take out this demand, and that's how it goes. It's a chain, all right? And for that, price will keep on mitigating the demand, invalidating supply, mitigating the demand, invalidating the supply, etc., etc. And again, we will begin to see a supply chain begin to form on the lower time frame, which is what we call the order flow. And once we see that order flow shift, then our bias, of course, is going to change, and we'll be looking forward to seeing the market, push and take out that supply that was created. Now, in as much as this is important for us, there are situations and moments where you begin to observe that demand fails to achieve its objective. So let's say, for instance, right here, price began to push to the downside. Okay, price pushed to the downside, came to this demand. This demand is a strong demand. By assumption, this demand is a strong demand because it has failed to take out that supply right here. It has failed to, it has managed, not failed, but it has managed to remove this supply right here. It has managed to invalidate that supply right there. So this demand is a demand that we're looking to taking some trades off of, or to maximize on, or to trade from. All right. Now, the proof that this demand is still going to facilitate the push to the upside where it breaks structure is when this supply fails. Right now, we can begin to see that sometimes the market will push to the upside, then fails to take it out or to take it out. All right, then again comes down a little bit. Then let's say it takes the demand out. So what does that mean? It means that this demand, all right, which is this previous one here, all right, this demand, all right, which is this one here, was not strong enough, all right, quite all right, when it was formed right here, price, this, let me explain it like this. This move was a reaction from the previous demand, which is this one, all right? This move right here was a reaction to the previous demand, which was this strong demand right here. This move right here was a reaction from this previous demand, which was right here, all right? So this move, all right, is a reaction from this demand that was created right here. All right. So now this demand has failed to do its objective. It has failed to carry out its objective. Why? Because it has failed to take out this supply right there. Any questions before I proceed?
No, that's fine.
Okay. So it has failed to take out the supply right there, and therefore making it what? Weak. So now what we're going to have right here is we're going to have a weak demand. So this one, instead of calling it a strong demand, it's going to become a weak demand. So we can say weak demand. And why is it a weak demand? Because now it has failed to take up this supply right here. So price came to this supply zone, which was created right here. So we can say supply, and failed to take it out because the objective was that the supply should go and the demand should hold. But then we see that the demand fails to hold. I mean, the demand fails to take out the supply, meaning that the supply is still holding, okay? Supply is still strong, meaning that sellers are willing to protect their sell position from right here, all right? Those that began to sell as the market began to push to the downside in that pullback phase. All right, so as we began to see the market begin to push to the downside in that pullback phase, sellers managed to do what? Managed to hold their positions, and they were not ready to liquidate their sell orders. So this then causes the push to the downside in order to take out even the demand that was that we could have considered to be strong, but then it failed to achieve its objective. All right, so then this supply is now going to become what? A strong supply. All right, strong supply. All right, at that particular moment, it's going to become a strong supply. And also, like I said, sometimes we need a confirmation in order for us to validate that the trend has shifted. So like we can see right here, we only have one low and one high in the market. We don't necessarily have a trend confirmation. So what price has done is that it has just broken one low down here, which we could also call a sweep, as we'll be looking at sweeps once we start looking at the matters of liquidity in once we get to liquidity this week. So we have just taken out one low, all right, meaning that it's not a confirmed trend at all, because sometimes if this demand fails, it becomes weak. As we have seen, it's a weak demand. Price would still want maybe to try and grab and find orders from the previous demand that maybe could be price wanted more liquidity to come into the market in order to grab enough orders for them to continue with the uptrend push to the upside. All right, now going to invalidate this supply right here. All right, so meaning that this demand could have failed to do its job until they went back to a previous demand, all right, collected some more orders that then managed to do what? To facilitate a push to the upside and managed now to take out the supply. So that supply was a strong supply, but it could not hold for a long time, because sometimes we need to also look at what is the trend of the market. All right, so in this situation, what we are truly looking for whenever we begin to look at the supply and demand, we also need to look at areas like what are the type of candlestick patterns that we are going to be looking out for whenever we want to map out the zone. So now, while we are still looking at the theory side of supply and demand, the market structure Okay, the market structure must always come first. Okay, whenever you begin to identify your supply and demand. So you don't have just to identify the supply and demand simply because you can see a zone that looks to be a supply or a demand in the market, but you have to identify those zones in line with the trend of the market. This is why I put these two statements there to say in an uptrend, demand is strong while supply is weak. And what that means is that we shouldn't be selling on every supply that the market shows us. Let's say we have a high right here, and then we have a higher low right there. Then we have a higher high for a confirmed trend. Then we have a higher low down here. All right. Now, the tendency with many of traders is we start shorting this supply right here. Right? We start shorting this supply. Why? Because sometimes what may bring that is a confusion when it comes to the lower time frame versus the higher time frame narrative. All right, where you begin to look at the higher time frame, then you get into a lower time frame and you begin to see, oh, okay, on the lower time frame, the market had created some form of structure. Okay, so we tend to start shorting the market in the wrong trend of the market. And what happens is that we get bent. We get bent. So always, if you are trading the higher time frame, stick to the higher time frame demand, all right, or supply, whatever direction the market may be in, stick to that demand or that supply. So let's say the market on the lower time frame was creating some higher highs and higher lows, right? Creating some higher highs and higher lows as it was pushing its way to the upside. Then price began to push its way to the downside in this way, all right? And once we see this, and then price then shifts, there's a tendency for us to start looking for some shorting opportunities right there. We want to start shorting the market. And this happens because of a situation in the market where price left an unmitigated zone, and we'll talk about unmitigated zones in this same session today, and the impact of unmitigated zones and how you can try to take advantage of them, but not for big price movements. So let's say price was pushing to the downside and creating lower lows and lower highs. Then price comes to this unmitigated supply zone. Okay, not like that. It comes to this unmitigated supply, all right? Because on the lower time frame, this supply was left unmitigated, and also it coincides with the higher time frame supply, and then we start looking for shorting opportunities right here, all right? And many traders have also made such a mistake where I start looking for some shorting opportunities right here. But then what happens is that the market fails to respect this. It may even come down a little bit here, give you some nice profits, and you think, okay, this is nice. Then price just takes you out, and you start wondering, what is it that I did wrong? Or what is it that is really happening with my strategy? There's nothing wrong with your strategy. It's just that you did not just know that the market on the higher time frame was actually breaking highs and respecting lows. So the market was in an uptrend. All right. So you were too zoomed in at that particular moment, looking at the lower time frame zones or higher time frame zone, trying to see if you can take them on the lower time frame and all those areas. I mean, all those things where you want to maybe trade an unmitigated zone that was not touched by the market, etc., etc. So that does really cause confusion as to which zone am I supposed to trade. Am I supposed to pick this one? Am I supposed to pick that one? Or am I supposed to pick which zone? So to end all that confusion, all right, in an uptrend, demand is strong while supply is weak. And in a downtrend, supply is strong while demand is weak. Now, what happens if price leaves an unmitigated area? So I'm going to put up another point which is quite important right here so that it may help you to understand some of these things when it comes to identifying supply and demand. So all unmitigated zones, if I say zones, I mean supply and demand zones, okay, may be considered for pullback facilitation. Only. All right. Okay. Is this statement is something that is very, very powerful because of what I'm going to explain. So all unmitigated zones may be considered for pullback facilitation only. All right. Only. Why? Because market structure is more important than supply and demand. Let me put that point again right here. Say market structure is more important than supply and demand. So market structure is more important than supply and demand, meaning that structure is important. Structure is important, meaning that before you identify your zones and everything, what is structure telling you? Are you bullish? Are you bearish? You need to know. From there, you already know what you are supposed to be doing. So you know that, okay, if I'm bullish, I'm looking for demand. If I'm bearish, I'm looking for supply, because demand in bullish market is stronger. Supply in bearish market is also stronger. I'm not looking to sell supply in an uptrend or buying demand in a downtrend market. This one is something that is going to give you that patience to wait for the right setup to come your way before you can take that trade. So let's look at some unmitigated zones and how they may affect your trade if you don't understand them correctly. So we have a higher high right here, then we have a higher low right there, then we have a higher high right there, then we have a higher low right here, and we have a higher high right there, and we have a higher low right here, then we have a higher high right there. So what we have is, at this moment, we are just focusing on a zone that is found at the lower high and at the higher high. All right. So like I said, in an uptrend, all supply is weak and all demand is strong. So we're going to have a weak supply right here. So let me just add weak supply right there. And we're also going to have a weak supply right here, because this is, it keeps on being broken, it keeps on being invalidated by the market. And even right here, we have a weak supply. So right here also have weak supply. Right, then at the bottom here, at the lower high, we have strong demand. So you can see strong and mitigated, you can say, and mitigated demand. Demand, all right? And you can also just copy this to strong, also here strong and mitigated demand. And also there we have strong and mitigated demand. Why is it being called unmitigated? Because price never came back to that higher low. Because the objective of the market, if we are trading supply and demand, then what we want to see is for the market to come and tap these levels before price goes up. Okay. Price must tap these areas, because this is why we are looking for a good discounted area to buy. Remember, if we bring in the aspect of the gun box, the one that we looked at on the market structure thing, we want to always buy in these areas. All right, so this is the most probable or high probability zone. All right, these zones that lies on higher lows in an uptrend are the highest probability, because the moment price breaks them, we are going to look for maybe a reversal or a sweep of liquidity. So I'll still explain further on the difference and why these are the most strongest zones that we need to be looking out for. All right, so now we don't expect price to break below this area. We don't expect price to break below this area. We don't expect price to break below that area. So we are in an uptrend, but we can see that price, the objective was for price to pull back all the way to come here. All right. So the objective was we wanted price to pull back, come here. We look for some buying opportunities. We take the market to the upside. We create that high. Again, price should pull back to maybe this area right here, because this is where the higher low is. So that's the objective. All right. So the objective is to see the market come back to these higher lows for buying opportunities. But it's not always the case. Why? Because there are two reasons why that may not happen. Because number one, internal liquidity, all right, may interfere with price not coming back to the extreme zone or to the higher low in order to grab those orders that are lying on that demand, which is at the higher low. And number two, because of what we call continuation zones or decisional zones. All right. So there are two reasons. And again, I'll expand them more once we start looking at two types of supply and demand zones. Okay, so now here we have unmitigated, unmitigated, unmitigated. And of course, all these unmitigated, they still have orders still lying or resting on those areas. All right, still have orders lying or resting on those areas. Okay. Okay, just a moment.
Okay.
Okay, so we want to see price come down to these areas because that's where buy orders are resting. But like I said, liquidity along this range, number one, and number two, there are zones that can still affect price from getting to these areas. But still, these are still going to be considered as unmitigated areas. Why? Because of what price is going to do. Now, there's this statement where I said, market structure is more important than what? Supply and demand. And also, all unmitigated zones may be considered for pullback facilitation only. So what does that mean? What that means is that price may even come right here, all right? And show us as if buyers are coming in, then it breaks that area, then comes into this area. Now, once price comes into this area, let's say this zone has moved from being unmitigated to being mitigated. So this one is now a mitigated demand zone, but then failed to do its work. So it became a weak demand zone because it has been broken. So weak, mitigated demand zone. And of course, I'm just doing this for a learning purpose. That's not what you should also be doing, but just for your learning purpose so that you understand what the process behind this supply and demand zone. So now we have what we call a strong supply zone right here. We have now what we call a strong supply zone right here. And since then that now we have strong supply zone right there, and it's a strong supply zone because it has managed to take out one demand zone which was supposed to be strong, but it has proven to be weak because it has failed to take out this supply. So you can see price pushed, then dropped to the downside, meaning that this demand has become weak. It has failed to take out this high right here. Now price comes to this unmitigated zone. Remember, this zone was strong because it managed to take out that supply right there, which was a weak supply. So it was strong. All right, it was strong, and it's just that price never put back to that area, meaning that price never grabbed the orders that were lying on that demand zone. So are those orders still there? The question is, no one knows until we see price pushes, and from here we see that demand either fails. I mean that supply either fails. That's what we're going to say. Okay, there were still strong orders right there that needed to be mitigated and that needed to be executed by buyers. All right, so price is here, but then we come back to market structure. We said market structure is more important than what? Than supply and demand. And what we have at this moment is that we have an unconfirmed what? An unconfirmed downtrend, because we have one high right here, and also we have one low down here. So what we have is something that is not yet confirmed. It's an unconfirmed downtrend. And now what we want to start looking for is, will this continue pushing to the upside? Because if we bring in the aspect of liquidity and all those things, we may say this is a sweep of liquidity, and we'll talk about sweeps later. Okay, so we may start thinking, okay, we are sweeping this low, all right, because buyers were not enough right here. So we are open to both buys and selling opportunities. We are open to both buys and selling opportunities. Now, what we start now doing is that price can either go up, break that supply, and resume its original trend. Why? Because we were in an uptrend. All right, we were in an uptrend. So price can just sweep this liquidity because we already had an established trend. So we can just sweep this liquidity and price pushes to the upside. Or price may then begin to establish a reversal. So these are two things that are going to happen. So if price may want to establish a reversal, then what we may expect to see is that this unmitigated may facilitate maybe a pullback, maybe to this area, or a pullback to maybe even this supply area right here. And then we may see the market then pushes to the downside, etc., etc. Then the market goes like this. Then it comes to this demand zone right here. Now, again, this demand zone was one of those zones where orders were not grabbed. All right, orders were not completely grabbed at this level right here. So orders were not completely grabbed at that level. So price again visits this odd demand zone. It visits this odd demand zone. And now what is happening is that now we have a confirmed downtrend, because now we have two lows and two highs to confirm that the market is now in a downtrend. And price decides to visit those odd zones that, because this zone was supposed to be mitigated by this low right here. This low was supposed to come here, grab all the zones. So once this low grabs all the zones, this was to be considered as an invalid zone, because we may not expect to find any traders or any buying opportunities right there. Now, we see that price comes to this area, all right? And what will be our thinking process? Our thinking process will be, now we are downtrend. How are we downtrend? Because now we have created another high right here and another low down here. So we are now confirmed what? Confirmed downtrend. So if we're confirmed downtrend, are we going to be buying here and targeting aiming for the moon? Okay, because you may start thinking, okay, this is a demand zone, so I may as well start buying right here and aim for the moon. That can happen because, in the market, it's an environment where anything is possible. And I'm not saying that that cannot happen. It can happen, but then we also need to look at the downtrend. We need to put trend before we need to put the trend or the market structure before supply and demand, which at the very best, what we may expect is price to pull back, all right, create a lower high, maybe around that area, and then price continues pushing to the downside. So this unmitigated demand zone right here is just going to be used to facilitate that pullback, meaning that if you want, you can take it on the lower time frame. Yes, on the lower time frame, you'll find it's a trend. But let's say if this is a 15 minutes, then you can just look at this one to be, okay, I'm not going to buy at this demand because already it is weak, right? Why is it weak? Because the moment this demand fails, this one also becomes weak, and also this one becomes weak, which for the very least can just be used for what? For pullback facilitation. Any questions?
That's fine now. I think I will have some questions, but Not now.
No, you can ask if you have, you can ask so that you don't keep hiding the questions. So you can ask, I'll still explain.
Yeah. So like it seems that I don't really understand when you said that we have the weak mitigate demand, you know, we're at the middle. So that this one I don't understand. So we're supposed to have a demand here and we can place according to what I understand
This one.
before. No, at your left. No, this one is you said
Okay,
it
you can
was
annotate on the screen. You can annotate on the screen so that I see.
let me. Can you see my screen, my mouse now? No?
Not yet.
Let me check to see what can I annotate here. So what's the option to annotate on the screen?
Okay, let me just allow you to become okay, you can control the screen. You can write on the screen.
Okay, like by here, you see this place here. I think we're supposed to have a buying power now. We could buy here, right?
Yeah.
So you agree on this one?
Buying here from where exactly? Because yeah, that's a law that's been created.
Like we have a high here, a higher low, and another one here, another one over here. So I think we could buy here. I didn't see where you said we can buy here, right?
Oh,
that's what you said.
Yeah, I understand what you're trying to ask. So your question is, can we buy right here?
Yeah.
That's what you're trying to ask. Why? Because of this kind of a situation, break and retest?
Yeah.
No. That's quite different. And this is where, because we are looking at supply and supply and demand concept is different from support and resistance, right? So for us, we don't look at break and retest like, you know, where you have to look at this. There's a way in which we qualify these kind of trades, all right? And this is why supply and demand comes in handy, because it is going to help us how we can catch these trades, not necessarily by looking at the break and retest, but by looking at this particular range right here. All right, so this is our range we're interested in. We are no longer interested at what happened here. We don't even want to look at it. So our interest is in this range. And in this range, this is what we're going to look at. We're going to look for zones that we can take advantage of. Even right here, we're going to be looking at this range, all right? And we're going to be looking at this range right here. So this is where we are going to get our entries, all right, from here. All right, we're going to look for areas of interest right in this range. Okay, not necessarily looking at maybe say a previous area of interest or a previous zone. No. Not even looking at the buy and break and retest. No. Okay, so it's different. Yeah, quite all right. We can buy here, provided that we have in this range, we have a reason to take a trade right there. Okay, we have a reason to take a trade. And this is where now we are going, because what I'm just showing you right here is something that may just look so abstract, like it doesn't really make so much of sense. But I want you to look at it from a different angle and begin to understand, like from the market structure perspective, then we're bringing in now another layer of information, which is supply and demand, to now at least begin to see how we can take orders and how we can take trades. But it's not break and retest. Okay, does that make sense?
Yeah, so I think you'll talk about it later, right?
Yeah, I'm still explaining, and I'll explain. All right.
Okay.
I explain. Okay. All right. So that's what we're going to look at. So all these areas are going to be areas of what? Areas of reversals, where we are going to look for buying opportunities, and all those areas that we are not mitigated, like these areas, the very least we can look for are just pullbacks. All right, because for a market to give you a pullback, it has to react on something, of course. All right, but then when we look at the market is quite diverse. This is where it's no concept is more powerful than the other. All right, and it all comes back to what you're really looking for in the market. And what I mean by no concept, I mean no strategy is powerful, because every strategy in the market works. Every edge in the market is profitable. What matters is the rules of that edge, which guarantees profitability, right? Otherwise, every edge in the market, it works. Now, let us look at two types of supply and demand zone. Two types of supply and demand zone. Oops, I thought. Two types of supply and the demand zone. Two types of supply and demand zone. Okay, so this information, I'm sure, something that you can remember. So we're going to look at two types of supply and demand zone, or types of supply and demand zones. You can say types, just two types, because there are only two types. Two types of supply and demand zones, right? Two types of supply and demand zones. So we have two types of supply and demand zones. And then number one, we have what we call reversals. Under reversals, right, we have what we call drop, base, rally. Does this ring a bell? Rally, base, drop. Okay, that's number one. Then number two, we have continuation. And then under continuation, we have rally, base, rally. And also we have drop, base, drop. All right, so these are the two types of zones that I want us to look at and how they are formed. So we have continuation and reversals. All right, so this is now where we begin to take it a little bit deeper and begin to look at how you can now begin to analyze and look at the market and see how you can take advantage of that. Okay, now I'll start with an uptrend, right? So if we are in an uptrend, the market does not just reverse. Of course, it has to give us some reversal kind of pattern, okay? And for us, the reversal kind of pattern we are always looking at is what we call the change of character. So for as long as the market is in an uptrend, we'll be looking forward to buying at demand and selling at, we'll be looking forward to buying at demand and always just buying at demand, all right? That's where we'll be looking to buy. And of course, we may want to sell at supply and buy demand. So buy demand, sell supply, buy demand, sell supply. In other ways, buy low, sell high, buy low, sell high, buy low, sell high. That's the whole idea of the market. We want to buy prices when they are low, lowest of the lowest. All right. Okay, so what we are having right here, like I said, supply in an uptrend will always be weaker than demand. So demand will be strong while supply will be weak. So you can see this is supply that was weak. And also here we have another supply that seems to be weak right here. And also you can see we have also another supply that seems to be weak right here. So we can see that as price is pushing to the upside, supply keeps on failing, meaning that supply is not a reliable place. So you don't have to start shorting here. because there's supply right there. You don't have to start shorting here where you want to sell because you can see it's a double top. You want to sell the market. No, these are not good areas to sell the market because the momentum is to the upsides. And what you should be looking for, therefore, is some buying opportunities. So again, we can see that at the same time, we're also breaking structure. So we have a BOS right here, which is a break of structure. So we're also breaking structure and creating those higher highs and higher lows. So that's market structure combined with supply and demand zones. Then at the bottom here, we are going to have what we call some strong demand zone. Now, when you start dealing with rally-based rally or drop-based drop and etc., okay, so we have the drop-based rally, which is a reversal pattern. Now, this one creates what we call a demand for a reversal. Now, it's not a reversal in the sense of a reversal because you can see that it's more of a continuation on the higher time frame. But then how it forms is that the market will first drop. So we are going to have this drop right here. We're going to have this drop right here. Drop. Then we are going to have a base. A base is where we're going to have our demand. So this whole range, or this is the whole zone right here, is what we're going to call a base. So a base is where we have our demand. All right. So a drop, a base, and a rally. Now, a rally must lead to a break of structure. So in demand, in an uptrend, a rally must lead to the break of structure. So rally. All right, so rally must lead to a break of structure. Let me just put something, say in parentheses, rally must lead to BOS, which is break of structure. So the way, just the term BOS, it means break of structure. So the rally must lead to the BOS, which is the break of structure. And here, also, the rally must lead to the break of structure. So this applies for both, all right, on a drop-based rally. And here, the drop must lead to the break of structure. That's the difference. So here, drop must lead to BOS. All right. So here you can see we had a drop. All right. We had a base. What is a base? A range right here. All right, a range right here at the higher low. All right, we have a base, which is our demand zone, and then we have a rally. Now, a rally has to do what? Must lead to the break of structure. So a rally must lead to the failure of that supply zone. Right, it must lead to the break of structure. It must lead to the failure of the supply zone. Again, we create a high. Then again, we have a what? A drop. So again, here we have a drop, then we have a base again. So a base, it could be a range that is created before price reverses. That range then becomes your demand zone, right? So again, we have a base right here, and then we have a rally to the upside, right? So we have a rally to the upside. And again, the rally must lead to the break of structure. So the rally must go all the way leading to the break of structure like this. Again, what do we have? We have a drop, all right? So we have a rally, drop, a base, and a rally, just like that. So for as long as the market is in an uptrend, we'll be looking forward to taking our buys from a base, all right? So drop, then we have a base, which could be a range. And we have a rally. Okay, so we have a rally. Oops, come on. We have a rally right here. Rally. Okay. All right, so always a rally must lead to a break of structure. Always a rally must lead to a break of structure. So we are always be looking forward to taking the buy from right here. Always be looking forward to taking the buy from right here, because we know that this higher low should be strong and should not be broken. It should always lead to the break of structure. So traditionally, conventionally, we are looking to buying the market right here. All right, we are looking to buying the market right here. So what we have is we have a rally, a drop, a base, a rally, a base, a drop, a base, a rally. So now the base on the upside in an uptrend are weak. Like I said, supply is weak. In an uptrend, demand is strong. This is why I'm more focused on the base. And this is why we need to start looking for some buying opportunities from this base right here. Any questions?
No, you can go ahead.
All right.
Because this one I have to watch it again to make sure I understand. Yeah.
Okay. Okay. So a drop, a base, a rally, a drop, a base, a rally. So meaning that even right here, we'll be looking forward to buying the market from this base. So in an uptrend, the market creates for us drop, base, rally, a drop, a base, and a rally, a drop, a base, and a rally, a drop, a base, and a rally. And what we are having here is that we are having a high, a low, a high, a higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. And it basically forms what we call a market structure, right? Market structure. Okay, so this is an example of an uptrend market. Now let's look at the example of a downtrend market. Again, it's just the same thing flipped. All right, we're just going to flip the chart just to give us an example of a downtrend. So we have a rally, then we have a base, then we have a drop leading to a break of structure. Again, we have a weaker base right here, right? Because demand on a downtrend are weak, and we have another drop, then we create a base right here, then we have another drop. Okay, so we had a rally, a base, and a drop. Again, here we begin to base, create a weak base, then we rally, create a base right there, then we drop. Right. So what are we going to have right here? Again, this is an example of a downtrend market. And in a downtrend market, like I said, your supplies are going to be weak. I mean, your demands are going to be weak while your supply are going to be strong. So we have this demand right here, which is weak. Also, we have this demand right here, which is also weak. We also have this demand right here, which is also weak, right? So we have all these demands which are weak. Then we have this supply right here. Now, before I draw this supply, I don't have to draw it. Let me first explain. So we have a drop, all right? A drop, then it creates a weak base, then a rally, all right? So what we have right here is that we're going to have a rally, which is this one right here. Rally, as you can see from here, we rallied to the upside. Then we created a what? A base. So this consolidation or this reversal right here is what we call a base. So this one is a base. So base. Then what happened? We dropped. So a drop should lead to the break of structure because we're in a downtrend. So drop, right? So like here said, drop must lead to the break of structure, rally, base, drop, drop must lead to a break of structure, rally, a base, and a drop. So we come back to a base. That's why we'll be looking forward for some what? For some selling opportunities. How do we come back to the base? The market must rally. So we're going to be in a rally as we are coming back there. So rally, then we create a base. As we are grabbing orders here, we create a base which becomes a supply zone for the future use. All right, it becomes a base or supply zone for the future use. Then what do we see? We see the market then begins to do what? It begins to drop to the downside. And that drop leads to the break of structure. And again, what happens? Price has to pull back to that area. So what happens? Price has to rally. Okay, so we have a rally. Again, price must create a base. Price must create a base. So from there to there, we are going to have a base. Okay, and then yes. All right, so price must rally, then it creates a base, then we have a drop that leads to the break of structure. So this is what I call reversal supply and demand zone. All right, so why are they reversals? Because you can see that price was dropping, created a base, it changed the direction. It was in a different direction as it was pulling back, created the base, changed direction. And just to add on, this is just basic, the same basic market structure which we have been looking at when we bring in this aspect of the gun box, where we start looking for premium versus discount, where we can be looking for some buying opportunities for us to start pushing the market to the upside, and etc., etc. So it's just that I'm using different terminologies. Why? Because now we are looking at the supply and demand zone. Then that's the reason why it sounds like it's really becoming a little bit of maybe a difficult for you, but it's just the same concept, because what we are having right here is we are having a break of structure. And like I said, every demand in a downtrend is weak, and every supply in an uptrend is also weak. All right. Now, it's not always that the market is going to mitigate, is going to pull back to the origin of the move that led to the break of structure. All right. It's not always that price is going to give you these nice moves, because these are way too discounted. These are good areas to be buying from. If you're an investor, you want to always want to sell high. Make sure price must push to the upside before you start looking to selling the market. So, but then the market is not going to always do that, right? It's not always going to do that because of internal range liquidity, and also because of other zones that may interfere with the market. So there are other zones that may interfere with the market. For example, imbalance can interfere with the market, and also other zones may interfere with the market. And this is where now we look at the continuation and what do these continuation mean, because it's not always that price will come back here. It's not always that price will come back to these extremes, all right? This origin of the move. It's not always that price will come back to this origin of the moves, all right? That's to maybe just give you a good example of what I mean. Let me just try to bring in the chart right here, and let's look at what I mean, that it's not always that price will come back to these extremes. So I have a good example somewhere right here, which is here. Okay, so you can see right here, we had a drop, we had a base, we had a rally, all right? So again, it's the same thing that I've been showing you. We have a drop right here. So you can say drop, this is an uptrend. Then we have a base right here. So I'll pick this candlestick. We have not yet looked at which candlestick you're going to be picking, but let me pick this candlestick. And this becomes my base. And this becomes my rally. So this is a rally. Like I said, the rally must lead to the break of structure. And what's the break of structure? The break of structure is somewhere right here. Okay, does that make sense now? Looking at the practical side of things,
yeah,
how we can, it now makes sense, right?
Mm-hmm.
Okay,
Better
so
now.
yeah, that's what I meant by looking at the base, the drop, the base, and the rally. So meaning that we'll be waiting for price to come back here. This is where we'll be looking to doing what? To buying the market, right? So here we'll be looking to buying the market from there, because this is what our strategy demands that we do. So our stop loss will be down there. Our target profits will be at that supply right there. So let's say, for instance, this was a nice trade that went on to hit our take profit based just on the drop based rally. Again, what do we have? At the same time, we created this rally, price created the high. Then what happened? We created a drop. All right, we created a drop. So again, let's identify it. Okay, let me just copy this for the sake of time. So again, we have another drop down here. You can see this is a drop that we have, and we're going to have another base, which is, let's say, this last bearish candle right here. We're going to say this is a base. All right, this is a base, and this is where I was saying that sometimes your zones are not going to be mitigated. So you can see this one becomes unmitigated what? Mitigated demand. So unmitigated demand zone, which is a base. Of course, it's a base, all right, but just to also bring in the idea of what we looked at about unmitigated demand zones, of which we're going to still look at them once we start looking at the practical side of things. So we have the unmitigated demand zones right here, and price dropped, created a base, and then we had a rally, right? We had this rally right here, and the market went all the way to the upside. It just rallied all the way to the upside. Now, this rally reached up to here, all right? The market just kept on rallying, and then it went all the way up to there. Then it broke what? It broke structure, which was this one right here. So we had a break of structure. So BOS right there. Now, let us see. Has price put back to this area? No. So it's not always that price will pull back to this area. So there will be those situations where if you were waiting for the market to come here, this is one of those trades that you wouldn't have taken, right? Because price is not always going to pull back to your extreme. So this is, according to what we are learning, we are supposed to be buying here. This is where we're supposed to be buying. But the market is not always perfect, because if it was, then it would make it so easy for everybody to do what? To make money, right? It will make it easy for everybody to make money, right? Things will just become so easy that everybody would make money. Okay. So this is why they know what they do. So they will look at the range, all right? What is the range? So this is our range right here. So let me look for it too. And I'll delve so deeper into this, especially more once we start looking at liquidity. This is our range, all right? So from that high, from that low to that high, all right? That's our range. So range is a distance between the higher low and the higher high. So this is our range, and price must pull back into the range. Now, into this range, there will be a lot of things that will be happening. There will be imbalance, there will be liquidity, all right? There will be zones that must be mitigated. So sometimes price may not necessarily pull back to this area because, like in this case, price reacted off of this imbalance, of which others may call, no, that's a break and retest. So they may call it different names, etc., which I don't really so much care. But according to my strategy, this is an imbalance where price came and reversed from and started pushing to the upside. But the idea was for price to come back here and we take orders from here. But then price may not do that because of what? A lot of things that may happen within this leg, within this rally, all right? And yes, you have a question?
No, sorry.
All right. So because of a lot of things that may happen within this rally, and this may cause, a lot of people to panic and do some dumb things sometimes. So if your strategy just tells you to say you'll be buying here, then there'll be times when you're going to have one trade, but one trade is going to be a good trade. Sometimes you may not have a good trade. Sometimes you're going to miss out on a lot. Sometimes your trades are going to hit stop loss, etc. Why? Because it's not going to work the same way all the time. All right. So like in this case, we had a drop, a base, and a rally, and price came back to our base, which is this one right here. So in this case, price worked. You can see price put back into this base right here. Then we had a nice buy. Okay, so there'll be times where that will work. Sometimes it will not work. Like in this area right here, we had a drop, a base, and a rally. You get it? So we mark this zone right here to say this is our zone, and look at what price did. So suppose in this situation scenario, they hit your stop loss right here, and of course they push all the way to the upside, but after taking you out. So there'll be times where this will happen, and if it happens, then price goes your way and gives you those big moves. So such things are going to be happening, and I will still explain how we can still handle such kind of situations should they happen in the market. So that's how you need to look at the market structure. So the market is going to give you different kinds of behavior. All right, it's going to give you different kind of behaviors, and it's okay to have such kind of behaviors in the market, because after all, the market is never perfect and it will not be perfect. So if we want to hold the market responsible for our losses, then we are not just being too fair to the market. All right, so that's an example of base, drop, base, rally, rally, base, drop. And we're going to look at them even more and more and more and more in the market and see how we can maximize on them. Okay, so the next example that I'm going to give you is what we call the continuation. Now, what is a continuation? The continuation is what will prevent the market from coming to these bases right here, like the ones that we identified, right? Price may not necessarily, let me show you this. Okay. Price may not necessarily pull back to the origin of the move. All right. So I'm going to draw something that I'm going to annotate, and I want you to pay close attention. Then I'll have to delete it. Okay, so we have a high, then we have a higher low, then we have a higher high. All right. So this here is what we call extreme zone. And then in parentheses, I'll say origin of the move that led to BOS, break of structure. All right. So that's the origin of the move. It's the extreme zone, origin of the move that led to the break of structure. So this is where buyers came into the market, decided to say, okay, this is where we want to buy, and push the market to the upside. After they were done with the pullback, they said, okay, we're interested in buying from here. This is where we're going to start loading our buying position in order for us to push the market to the upside, leading to the break of what? To the break of structure. Okay, so this is the extreme zone. This is that zone. All right. Okay. And the break of this extreme zone is only a change of reversal. So this zone should not break. Okay, so price should not break the extreme zone if it is to remain bullish. Right? We have already dealt with this information before. So price should not break the extreme zone if it is to remain what? Bullish. So meaning that no matter what they do, once they come to this base right here, as we are having a drop, a base, and a rally, as they are pulling back into this base, the market should not break it. All right. The market should not break this. They should just pull back into that and continue. If the market should remain bullish, all right, they shouldn't break it. So the moment the market breaks it, it means that it is going to be in a different position, which is unconfirmed bearish, because now we don't know what will be the next agenda or the next direction these guys would want to take the market to. All right, I believe that makes so much sense. All right, so this is an extreme demand zone. All right, it's an extreme zone. It's an extreme demand zone, the most important zone. All right, most important zone in the market, the most important zone in the market, the most important zone in the market. Now, having this understanding, it can also be same for the sell. Let me just flip the chart just to show you the supply side. So here we're saying that extreme zone origin of the move that led to BOS, which is the breakout market structure. All right, and I've just flipped this the chart. And what this does is that the market should respect this zone. It shouldn't break it. So once price breaks this area right here, like if it does this, then we are unconfirmed bullish, meaning that it can be a signal for a reversal. All right, meaning that now this zone is weak and we may start thinking of this lower low to be strong because this demand right here has failed. All right, so it should not fail at all if the market is to remain bearish. So if the market should remain bearish and continue in its bearish trend, then this should not break. So price should not break the extreme zone if price should remain what? Bearish. So let me just edit this and say bearish. All right. Okay, but if it breaks that, then the market is no longer bearish, but unconfirmed bullish. Any questions?
No.
It's clear, right?
Mm-hmm.
All right. Okay, so now let me explain about the continuation. So let me explain why the reason why sometimes the market may not come back to this area. So sometimes you see the market just moves away. I mean, uses any zone within this range, okay, and price pulls back there and then it pushes to the upside and never comes back to the extreme, which is one of the most important areas of the market. So let's get into that and let's look at how we can break down that information. Okay. So now there are, like I said, there are two types of zones. We have continuation zones. We also have reversals. We have dealt with reversals, but again, we'll still look at reversals because we cannot talk about continuation independent of reversals, right? So again, take an example of an uptrend market. We have a higher high, then we create a higher low down here, then price, you know, it bases depending on what type of, you know, zone it wants to create, then it pushes up, then again, price pauses a little bit, somewhere right here. And from there, price then breaks the high. All right. So this is something that is very, very, very much important. And sometimes we can have different number of more than one pauses in the market. All right. So this one is a breakout structure right here. And what we have is, remember, we have a drop. Shouldn't remember, we shouldn't forget that one. We have a drop and we have a base, of course, which is this one right here. Okay, we have a base, which is this one right here. So you can say base or demand zone or strong demand zone. It's one and the same. All right, then we have a general rally. We have an overall rally. So this is an overall rally. Okay, in this situation, it's going to be an overall rally. But again, we can see that we had a rally before we had this consolidation, another rally. Right, so again, we can see we had a rally right here. Then we had a base. So this consolidation is going to be our new base. So we have another base right here. Base. Then what do we have? We have another rally. All right, we have another rally. Okay, now this rally also leads to the breakout structure. Now, what we are having here is what we call a continuation pattern. All right, we have a reversal model, then we have a continuation model, which is rally, a base, and a rally, right? That's a continuation model. This is why I was telling you to say, we don't look at these highs to say, okay, now we'll be looking for a break and retest where you draw your line or you draw your zone like this, all right? No, we don't look at that, even though that does happen because no strategy is 100% correct. But for us, we are more interested in finding zones within this range because ours is to trade with where orders are flowing. So we look for a range within, all right? We look for anything that may be found within this range. That's what we are looking for. All right, so we have a rally, a base, and a rally. A rally, a base, and a rally. Right? That's a continuation. So you can see rally, base, rally right there. So this rally, base, rally is going to be one of the reasons, not a reason, not the reason, but one of the reasons why price will create a base right here, and then, you know, continues again to do the same thing. Right, so price just does the same things over and over and over and over and over again, right? So it will be the reason why price may never pull back to here, right? It will be one of the reasons why price may never pull back here. Like I said, there are 3 reasons why price is not going to pull back to our extreme. So this is our extreme, which is the strongest, which we expect not to be broken, all right? And like I said, price may not necessarily pull back to that area because of, number one, we have continuations. Like I said, we're going to have zones within the range, number one. Number two, because of liquidity. And number three, because of imbalance. And all these things, we're going to look at them separately in order just to have a vast understanding of what may truly happen in the market, so that you don't have to miss out on trade opportunities or trade ideas which may show up for you in the market. All right. Now, so here, price decides to use this base. And again, what do we have? We go back to the cycle. We have a drop, right? So we have a drop. And again, we have a base. So in this situation, we're just going to pick anything. So say we have a base right here. Okay, so this base is unmitigated base, and it can be used later, maybe for a pullback, etc., etc. So we have a base right here, and we have a general rally. So we're going just to pick this overall rally, which leads to the break of market structure. All right, and we also have a break of market structure like that. Okay, BOS. We have a break of market structure like that. At the same time, we also have a continuation setup. So we have a rally. So from down here, we have a rally right here. Rally. Then we also have a base like this, right? Which is a reaccumulation of orders before they can continue pushing the market to the upside. So we can say a base. And then we also have a rally again. So a rally continues, let's say from here, rally continues. So we have rally. All right, so we have, so you can see a rally, a base, and a rally. Now, what does that mean to us? What it means to us is that we have a continuation zone that price may use. And, you know, price again may either use this one to push to the upside like that. It's okay. All right, it will be one of those reasons which will cause price not to come to this extreme here. So this is what we call extreme base. Let me just say extreme base. Even right here, this was the extreme base. All right, so this is why it's going to lead the market not to come back to that extreme base, right? Because there's a base within this range right here, from this low to that high. There's a base. All right, because of the continuation pattern that we identified in that range. All right, any questions?
No.
Okay, so it sounds to be clear, right?
I don't want to say that. What I hear here, it's I will need to watch the video again to be understand exactly this part.
Okay.
If I have any question on this, I will text you, right?
All right. No, not a problem.
It will be better for me to watch it again.
All right. Not a problem. Not a problem. You can watch it as many times as you want, just for you to understand it and understand the concept and the ideas being presented. Okay. So let us continue. And again, I don't want to make it very long because it may be too much information. So we're going to cut it short and we'll continue. The next time we continue, we're going to do continue from where we're going to leave to leave. And then we are also going to go to the chart so that now we can get this knowledge applied to the chart so that now it may make so much sense to you.
Yeah.
All right, so this is what we are going to look at when it comes to continuation. And just to avoid me drawing things, the same things over and over, I'll just try to flip the chart and just try to edit some of these things so that we look at it from the downtrend. Okay, so we have a downtrend like that. So this is a flipped chart. Now, in a downtrend, we'll be creating highs, lows, lower high, lower low, lower high, lower low, and lower high, and lower low. All right, so now what we have is we have rally, and then we have a base, and then we have an overall drop. So this one is going to be called overall drop. All right, then we have again a drop, rally, drop. So this one is, a drop, base, drop. So we're going to have a drop, base, drop. Exactly. All right, so again, here we have a rally, then we have a base, extreme base right there, then we have a drop, base, drop. Okay, so we have a base, and then a base right here, and then we have also a drop right here, and then we have the overall drop right there. Okay, so this is an example of a downtrend again, all right? And we are still looking at this information right here. So what we have is that price will rally to create a what? A lower high. Then after price rallies to create a lower high, that lower high becomes a base or extreme base. And then price will...
I have a question.
Yeah.
Does the rally and the drop replace the swing?
Does the rally do what?
Replace the swing, because before we said that
a swing.
Yeah.
No. It's just like I said, it's just a different terminology. It's just a different terminology. It's a swing. Yeah. It's one and the same thing. Now, I'm using this because now I'm looking at supply and demand. So remember, like I said, structure is more important than supply and demand. It's the same structure: high, low, lower high, lower low, lower high, lower low, lower high, lower low. It's the same. It's a market structure. This is why I've put this BOS to show you that we are still dealing with structure. You get it? This is why I've put this break of structure right here. Now, I've just added in another, for you to understand supply and demand, I've just now added rally, a base, and a drop to help you understand what we are really, really looking for. But it's just the same market structure. Are you getting it? Yeah. I don't want you to get lost and start thinking, okay, now we are looking at a different concept. We are looking at some different ideas. It's the same idea. All right. We are just going one layer above what we've been looking at. We are now adding supply, because now with supply and demand, we are now getting into where you can start executing your trades. Areas where you can begin to look for buying and selling opportunities. When we were looking at market structure, I told you to say, let's not rush for where to buy and where to sell. That will come in later. So now we have now started looking at where you can buy and sell. This is now you trading. You get it? If you can master this understanding, this information that I'm presenting to you now, you'll be warm and dry to take a trade. Are you getting it?
Yes, I do.
All right. So I don't want you to to let this information confuse you. It's the same thing. It's just that we are dealing with now supply and demand. This is why I'm not focusing so much. I'm looking at, these are the same lower highs. This is a lower high, a lower low, lower high, lower low, lower high. But now we are giving them a different term because now we're looking at supply and demand and we are calling them a base. They're still swing high, swing low, swing high, swing low, swing high, swing low. But now, when you look at demand, on the swing high, this is where we find a supply zone. On a swing low, in a downtrend, this is where we find a weak demand. You understand? Yeah. So watch it over and over, and you're going to understand everything that I'm sharing.
Yeah.
Okay. So we have extreme, which is the best, and this is where we expect price to pull back to. All right, we expect price to pull back to this area so that we can look for some selling opportunities. But then also that may not happen because now we have inside this range from that lower high to this lower low, we have a continuation kind of a range or pattern, which is a drop, a base, and a drop. Right, and then we pull back into that area, then this drop here may prevent price from coming all the way up there and mitigate that area before we start dropping again, because this should not be broken. It should hold no matter the situation. Okay, so internal supply, continuations will also interfere or influence where the next higher low or the next higher high is going to be formed in the market, or the next lower high or the next higher low is going to be formed in the market. So we can see right here, price comes and reacts off of this base, then we drop. Again, as we are dropping, we create another continuation, which is a drop, a base, and a drop. And then price comes back there, then tries to react on that area, then it continues to drop to the downside. Now, just to add on some few things, let me show you on the real chart how this actually looks like, so that at least you may have some good understanding of what I'm really talking about. So I'm going to look at one basic one, which is very basic. So we have this drop right here. You can see this is a drop. I'm using now drop. Then we have a base. A base could be anything. A base could be this low. Okay, in the next lesson we're going to look at how now you can choose which candlesticks. All right, but for now, because I don't want to give you so much information, I'm going to skip that one in today's lesson. I'm not going to talk about it. So we have a drop, a base, and we have an overall rally. This is an overall rally like that. All right, rally. Now, at the same time, we have a rally. This is where now I want you to pay attention. We have a rally. And we have a base. Have you seen a base? Which one is this one here? You can see that's a base. Price paused. So you can say base. And then we had another rally. And this is exactly what I was sharing with you, right? So you can even see that price used this base. This base here prevented the market from coming down here. You can see, okay? Yeah. It interfered with the price. And this is where the higher low was formed and price pushed to the upside. And that's what we are really talking about. Even right here, you can see we had, now if we go on a lower time frame, this is, you can see that we had a drop from here to down here. It's a drop. So we're going to say drop. Then we have a base, which is this one candle right here. We're going to say this was a base. And we have a rally, an overall rally. So we're going to pick this one overall rally like that. Then as we are having this overall rally, you can see that price pushed, created that high. Then it created this range right here, right? This candlestick, it's a range, this candlestick, which looks like a speeding top, all right? This candlestick, it's a range because price pushed, all right? Failed to close above this high, all right? And it ranged above, ranged, then price pushed with this big candle. So that's a range. On the lower time frame, you'd realize that it was indeed a range. So we have this range right here, which now becomes our base. So if we can even go on a lower time frame, like M30, where are we? M30. Okay, it has disappeared because, let's see. Oh, okay, it's still there. Should be there. All right. Okay, where is it? Yeah. Okay, so right here, you can even see that if we look at it on the lower time frame, you can see how price reacted off of this area on the lower time frame. Okay, and this is where price came and reversed from. Okay, reversed from. So on the higher time frame, that becomes your range, that becomes your zone. That's where you'll be looking forward to see if price is going to react off of this area, and then you can look for some buying opportunities to the upside. So these ranges are also very important. You can see we had a push, we had this range right here, then we had another push. Price comes back to this range and then pushes to the upside. So if we are dealing with the market structure, like I said, market structure is very important. So we have this breakout structure to the upside and this breakout structure to the downside. And then what happens? Initially it was a rally, a base and a drop, rally, base, drop, but this drop fails to take out this high, so price reverses. So now we have a rally, you can see that one, rally, a base, which is this one, and another rally. So you can see this impulsive candle shows that we are rallying. These smaller candles right here shows that we are basing. Then another impulsive candle shows that we are rallying. And then what happens? Price pulls back into this base right here and then continues from there. All right. But then we'll go deeper into this the moment we start looking at the practical side of things, so that you can see how you can bring this information together. All right. Let me just see. Okay. Let's get back to this drawing. So this is what I mean by that. So let me just clear this whole thing. Now, finally, I don't want you to become so, I want this to really confuse you. So I'm going to give you an annotation, right? Just to help you understand what we are dealing with. So you can have many zones within that range before we see a pullback. So here, just going to use one leg just to help you understand something. So here we have a breakout structure, BOS, right? So here we have the first thing that we need to identify is that we have a drop. It could be a rally, doesn't matter, but here we have a drop. Then we have a base, which is this one right here. A base, and then we have a rally, which is this one. Rally, great. Then inside here, we're going to have a rally. You can see this was a rally. Okay, then we're going to have a base. So you can have many continuations. Many continuations, just depends with what the market has been pushed doing. Then we have another rally. Then we have another base.
Question.
Base. Hello? Then we have
I have a question.
Yes, you can ask.
Okay, can we consider this one, the one that you are doing here, is like an overall rally, or just?
Which one?
Like the one that you have now, you have rally for all of them, but you can consider it as overall?
Yeah, this overall rally is for
Okay.
a swing, or it's a swing. That's why I'm using it as an overall rally. You can say it's a swing, all right? It's a swing, all right? So from this low to that high, it's a swing.
Yeah,
You
that's
get
what I
it?
said. Yeah.
Yeah, that's why I'm calling it an overall rally, because it's a swing, okay? But in this overall rally, which is a swing, all right, you're going to have these continuations. So these are going to become continuations. So I'm going to say continuation base conti. So I'm just going to use a shortcut continuation base. Even here, these are continuations, all right? They're not necessarily reversals or anything. So these are continuation bases, all right? Continuation base. Even right here, this one is going to be called a continuation base. Right. So this overall swing, it's an overall leg, like it's a leg like this one from here to there. Okay, it's the same from here all the way to there. But then you will realize that in that overall leg, you have different pauses in the market. So price pushed, paused, continued, paused, continued, paused, continued until it created a higher high. So all those become your continuations, and they become important to you because all these may still affect price. So we can see that maybe price may even come here and continue pushing to the upside. You get it? So any of these zones can be used, right? Any of these zones can be used, right? Any of these zones can be used, but we don't know which one. So this one is going to be called extreme zone, extreme base. So any of these three bases here, all right, apart from the extreme is the most high probability zone, all right? Then any of these three zones can be used for our reversal. So price can either come here, all right, and push to the upside, or price can come right here. It can break this zone here, right? Break this zone and come to this zone and then push to the upside. You understand what I mean? Or price can break this zone. Huh?
I said that anywhere on the chart.
Okay.
On the base, I mean.
Okay, it's not difficult to identify them.
I said that based on your example,
mhm.
The price can go anywhere on the chart,
Yes,
on the base, and go back and make
yes,
a reversal.
exactly. Exactly. So it can either use this one, or it can use this one, it can use this one and go back. Yeah, exactly. But price, the strongest of them all is this one. All right, this shouldn't break. The extreme one is the strongest of them all. So these ones are going to give you the probability that these are going to work. It should be 50%. All right, not 100, not 200, but just 50%. That's the probability that these continuation bases will work. And for you to get a trade on these continuation bases, this is where you look for a change of character on the lower time frame. Only you have to wait for confirmation on lower time frame on these bases. On each of these bases, look for continuation, confirmation. All right. But on this one, you can even take what? A buy limit. You can just set a buy limit. If price pulls all the way to this one, it's okay. You can take a buy limit. But on this one, you have, because you don't know which of these three is going to hold. Whether it's this one, or it's this one, or it's that one, you don't know. So again, to avoid that confusion, remember, this is why now we discussed the importance of a what? A gun box. Remember the gun box? I hope you have not forgotten the concept of the gun box.
No, I don't. Oh, I even have some question for this, for the gun box.
Okay. So I think we can end here, because I don't want to now make it more complex. So first of all, go through what you have looked at. Then, the moment you are done with this, I don't know which next day we are going to meet within the week, so that we may finish off on supply and demand. So go through this content that we have looked at, and then we are going to continue. And then if there's any question, you can still ask, and then I'll be able to respond via Fiverr. But you can ask a question on the gun box.
I think you are not there yet because I already talk about this. I want to know exactly how to control the peeps and everything in the gun box. I'm waiting to finish with the supply and demand. I will ask you. Maybe you will explain this yourself.
Okay.
I don't know. I think.
Okay. So until we finish supply and demand zone, right?
Say that again.
I'm saying you're waiting for the finish of supply and demand.
Yes, because probably you will explain everything on the gun books after, because it will be when you are taking your trade, and you will say, this is what I did, this is where I will take the trade, and this is what I do. And at that time, I will ask you.
Okay. All right.
Yeah, because I want to know how to control, how to calculate the pips and the points on the gun books. That's why.
Okay, no, the gun box, you don't use it to calculate the pips or the points. Okay. The gun box, you only use it to determine where you need to buy from. That's all. It's only there to help you that you don't look for buying opportunities above the green line if we are buying. If the market is in an uptrend, everything above the green line is, you don't have to look at it. You have to ignore it until price comes back into the below the line. That's all. That's the only purpose. So you just put it there to say, are we overpriced? Are we oversold, or are we overbought? Everything above this line here is overbought. We don't buy in this zone. Everything below this line is oversold. We buy. So here we buy. Okay, we buy. So we look for buys. So this is why we look for zones that are going to be found in this area here. All right. So for example, this will be a zone that will be looking to take in some trades from, because at least it's in a discount. But this zone, we are not going to buy from it. Neither are we going to buy from this one, because these zones are in the wrong place. They're in our premium, and our premium, we don't buy. You get it? So
yeah,
we are going to, like I said, the concept and the idea of a gun box is for you to understand where you need to focus on, where you need to concentrate much of your attention on when it comes to buying and selling. All right?
Yeah.
Okay. So again, if you don't really understand the whole idea, yeah, you are going to understand, because we use the gun box more to help us find which zones are high probability zones that we can look for buying. So you still understand it. Don't have to worry. Okay.
Yeah.
All right. So just take it easy and take it step by step. I know you are learning a new strategy. I believe this is a new strategy. It's a new system of trading that you're learning. And this is why you need to just look at it religiously and follow every instruction that I'm giving you. All right. And just apply it the same way I'm giving it to you. Just study it religiously. The moment you combine this with any other system, it will become more complicated and it will confuse you. Okay. So you have to unlearn all those things that you learned previously prior to me becoming your mentor and all that. You unlearn all that information and you start taking in this information so that we start moving in together, because it will only make sense when you believe that it is what it is. Yeah. And everything that I'm giving to you is an information that is coming from proven principles that I've seen. It's not just theory, but it's something that I've been proving on the charts over and over, and I've seen them working. Okay. All right. So yeah,
I think a question on the previous lesson. You know, I watched your video over after I finished. Let me see. I take a picture. Let me see if I can find it happily. It's in red here. Oh, no, not this one.
Okay. No
I
problem.
save
You
it
can ask.
somewhere, but if I don't find it, maybe I will ask you another time.
Okay, no problem. Once you find it, you can ask.
Yep. Yeah, because I listened to the video yesterday and I found I have a question on it. I didn't understand. When I get it, I will send it to you.
Okay, all right, no
Yeah.
problem. You can
Yeah, because I
always
listened
ask.
to the video over and over when I
Oh, okay.
after, yeah.
That's great. That's great. That's
Yeah,
great.
I
It
do.
will all make sense to you. Trust me, it will.
Mhm.
It will.
Yeah.
Okay. All right.
Okay.
No, you can ask if there's still some more questions.
No. I think I prefer to what the question I would ask. It's because when I look at the so you said that you trade on the Nasdaq, and I'm looking at your screen here. It's US 100.
Mhm.
But when I watch, remember the trade I sent you the other day? I took the other days, right?
Mhm.
I can't find exactly the Nasdaq like the one you have here on the MT5 when I'm trading, when I'm using the paper trade.
Oh, the one that I sent, the one that you mean, the
The-
one that I sent, the Nasdaq.
Yeah, the one that you have now, you have here now.
Oh, okay. That one,
So,
it's found on FX Pro.
okay, I don't know why I can't find it.
It's a broker, FX Pro.
Oh, okay. So I see what you mean. You mean the price is based on the broker, right?
Yeah, it's a broker.
Oh, okay. Because I check on Owanda, you know it, right?
Yeah, I know Owanda. I think I have Owanda right here, which is here, Owanda. Okay.
So the price is different on it.
Yeah, so we find that the pricing will be different because of different feed. All right, so these feeds are quite different, and yeah, there will be some slight variations between these two feeds, and it doesn't, but the variations is slightly lower. Yeah, so this is Owanda. So for Owanda, looking at where the market is, we came into this area of interest. This is where we're looking for some buying. Price seems to be buying from there. And yep, we were downtrend on 1 minute, lower high, lower low, lower high, lower low, then higher high. We came into this area, then we are buying. So it's the same thing. There isn't any difference. There isn't any difference. It's just the same thing.
Oh, okay. Okay.
Yeah, that's the same
Okay.
thing. All right. Okay. See you.
Okay. So thank you very much then for today.
All right. Thank you. Bye. Have a
So
blessed day.
when do you think we can take our next meeting?
Let's do Wednesday.
Wednesday, okay.
Wednesday.
It's at 3, right? 3 p.m. my time.
It will be what p.m.? 3 p.m.
Oh, yeah.
Yeah, we can do 3 p.m. No problem.
Okay. So thank you very much.
All right. Thank you. Bye.
Okay. So have a great day.
All right. Thank you, and have a good one as well.
Thank you.
Bye.
Bye.